And it's time for another Macro Monday, where I get you ready for the week ahead in 5 minutes or less. As always, this is just a small snippet of our full Macro Monday newsletter. So if you're looking for more in-depth coverage on the week ahead, I highly encourage you to check out the link I'm going to put in the description of this video, and that will bring you to the full version of this week's newsletter. Again, highly encourage you to check it out if you enjoy these videos. Okay, and the chart of the week. So it's starting to feel a little bit like Groundhog's Day. I'd say the same thing every time, but once again, we're heading into a light week for data. Even if the government shutdown were to end tomorrow, which seems highly unlikely at this point, it would still take time for the BLS and other government agencies to catch up on the delayed releases. So it's going to be a while until we get government data. However, the show goes on. So this week, our focus turns to the 3 regional PMIs that are being released. You'll see on which days on the next calendar. But the Dallas Fed Index arrives on Monday, followed by Richmond on Tuesday, and then the Chicago PMI is on Friday. Interestingly, if you remember last week, we had the Kansas City Fed Index, and that reading was quite strong. If you remember the old Wall Street adage, buy the smiles, that's exactly what it looked like if you look at the chart here. So you see we have this big sort of swoop down and clearly on an upswing. And if you look at the clip, it is following the path set by interest rates, just as we would expect. Again, we don't usually spend much time on the Kansas City Fed, but it seems to be responding to the lagged effects of lower interest rates. That would argue for more upside in the months ahead. In order to see if this trend continues, we'll be again checking on the Dallas, Richmond, and Chicago to see if they echo that same constructive tone this week. Again, as you'll see, not much going on. I didn't include the government series in this because, again, unlikely, basically 0% chance we get those this week. But we do have some things to talk about. So the S&P 500 has pushed to new all-time highs, and that is reflecting enthusiasm following a softer than expected inflation report earlier on Friday. Both headline and core CPI for September registered at 3%, which reinforce expectations for a rate cut at the upcoming meeting this Wednesday. So as you'll see, Wednesday, 2 p.m., the FOMC meeting. While the year-over-year figures for inflation eased, giving the bulls some fuel, month-over-month inflation remained firm, tempering some of the optimism. So where does that leave us? Betting markets now assign roughly 98% odds of a rate cut this week, which is up from about 50% a month ago. This shift is driven less by inflation data and more by signs of labor market cooling. However, the ongoing government shutdown has halted key releases, including the September payrolls report, if you remember. Markets had braced for another weak employment reading, as a stronger print might have reduced the likelihood of additional easing and pressure equities. Chairman Powell's recent remarks suggest he views current policy settings as broadly balanced. This places the Fed in a delicate position with meaningful risks regardless of the decision they decide to make. Cutting too aggressively could reignite inflation, while tightening might exacerbate the slowdown in employment. Again, and it's kind of hard to see because we haven't gotten some of the key employment series that we're used to. In this environment, investors are likely to remain hypersensitive to new data points and headlines, with volatility reflecting the ongoing tug-of-war between growth and inflation. So again, the big thing this week is on Wednesday, the FOMC. Otherwise, we will be looking at the PMI releases, Dallas on Monday, Richmond on Tuesday, and then Chicago on Friday, to see if the trends we saw in the Kansas City Fed last week match up with what we see this week. And that's what I will leave you here with today. Again, hopefully we're getting more data at some point soon in the future and this government shutdown comes to an end. But regardless, I hope you have a great week. Don't forget to subscribe, and I will see you right back here next Monday for another Macro Monday.